The following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve, thank you for taking my call. I just wanted to pass a compliment to you. Taken a lot of classes from Tom since I became a Tiger back in 2009, and they're always phenomenal classes. And last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. Material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Anything like that. This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to July 31st. The July 31st, terrific Thursday edition of today's opening bell on the Trader's Edge. I'm host Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone had a wonderful Wednesday. I know I did. Now let's make sure that you and I, that we do all that we can do to have a terrific Thursday. And welcome to all our new listeners here, because check-in time for the Hotel California now begins at 8 a.m. as our man John Logan kicks off his show, the Global Market Pulse. Nice show again this morning. John, remember, check-in time here is 8 a.m. And then, of course, you can check out at 6 p.m. right around dinner time, because we go live 10 hours a day here at TFNN. And that's important, especially as these markets continue to change. So you'll get the latest up-to-the-moment analysis of what the markets are doing. We've got an interactive forum. That means you can give us a call. 877-927-6648. That's our call-in number. My outcome here during the next couple hours, I'm on for the next 2 hours, it's to teach you some of the tools for trading that I like to use, the lightning bolt pattern, the A to B equals CD. We take a look at Fibonacci expansions and retracements. The markets are always expanding or retracing. We can use those as guidelines as to where price is likely to travel to. And, of course, we like to use the signals of the bulls and the bears, because they report for work each and every day, and they leave signs for us. So we just need to read their signs. I also like the tools of the mind. So let's just begin our day with 4 quotes out here, 4 quotes that might make you say, something to think about. The first one by Ayn Rand. At least that's how I pronounce her name, even though I think it's Ayn Rand. And she said, the question isn't who is going to let me, it's who is going to stop me. Ooh, I like that. How about Steve Jobs? He said the only way to do great work is to love what you do. Boy, I love doing what I do and love being here with you each and every morning. Teddy Roosevelt, he once said, do what you can, where you are, and with what you have. Now, that is the way to live. And then finally, we'll let Grandma Moses take us into the market out here. She said, life is what we make it. Always has been, always will be. It is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. We've got Dow futures trading up 116 points right now. They're trading on at 16,704. S&P futures off nearly 14 points, trading on at 1951. NASDAQ futures off 30 points, down about 0.8%. They're trading out at 39.38. Russell 2000 off about 11 points, trading at 11.32. King dollar up 8 pennies, trading out at 81.60. Goldilocks back $7. She's trading out at 12.87. Silver off 2 pennies at $20.62. Light sweet crude off 66 cents right now. Let's take a quick peek across the globe out here. We'll see the DAX is off 121 points, a little over about 1.25% as we speak right now. The FTSE down 14 points, so kind of a muted impact impact on the market with regard to the FTSE. The Nikkei, relatively unchanged, off 25 points, but on an index that finished at 15,620. That was not much of a move. Hang Seng, not much of a move either. It was up 24 points, and that's an index that closed at 24,756, and the Shanghai up 21 points. That was up another almost a full percentage point out there, 23.0521. Who is it that sang that song, Don't Cry for Me, Argentina? Well, maybe it's the Argentina woes that are moving these markets lower out here. But let's begin, because we are now July 31st. How about that? The summer is quickly, of course, when you live in Florida, it's basically summer all year long out there. But it is July 31st, and let's begin by taking a look. Let's look at the futures contracts. Let's go ahead and do this on multiple time frames. We're going to start from the larger time frame and step our way back. Obviously, the month is not over because we have today's trading session, but nonetheless, let's go take a look at it. We're going to start off by taking a look at the Dow futures, because arguably they are the weakest. You've got the Dow and the Russell 2000. So as we take a look at the Dow futures and you compare us to where we were at last month, really not any significant damage. Yes, this actually qualifies as a bearish engulfing candle, but you have to take a look at last month's candle session. Last month, you had the Dow. It actually opened. This is the month of June. It opened at 16,704. It closed at 16,740. So there really was nothing but a whole lot of jostling back and forth inside of the market. So for this month to have a bearish engulfing candle, kind of just so-so. Also, right now, for the close like this, it would be called a shooting star. Now, we do have price having moved higher, done it on less relative strength. That's if you're watching this on TigerTV. It's part of the Rhodes Momentum indicator tools that we're taking a look at. Of course, the light blue area tells us just how strong this market move has been. And on the monthly chart, there's nothing here that indicates, other than some potential patterns out here, nothing that really indicates that this is anything significant yet out there. Now, if all holy heck breaks loose and you were to see it close below May's low out there, that low would be 16,305. Remember, we are in the sell in May. Well, maybe not exactly May, but sell during that 6-month cycle that runs from May through October. Then that would, again, the open on May was 16,515, if I didn't mention that. So that's what's going on a monthly chart out there. Still in really fairly strong condition. And that's in something that is relatively weak. You'll see as we go take a look at the daily charts. But first, let's step back. Let's take a look at the weekly chart out here. The weekly chart also shows price moving higher with some less relative strength out there. But still the damage fairly well contained. These moving average lines out here, they're still in bullish mode, turning down slightly, but still in bullish mode. The black line on here, that's the 20-period moving average. So you take 20 times 5, right? You've got 5 days in a week. So in essence, that becomes your 100-day exponential moving average line out there. That's at about 16,621. Dow futures is what we're looking at. So damage so far relatively well contained out here. However, we switch down to the daily. The daily is going to show us that more damage. You've got price right now traveling below, and you can see the signal here in the Rhodes Momentum trading strategy switched to sell mode yesterday. Have got follow through today. So if this market is truly cracking here, where is price likely to travel to? Well, the first place that you're looking at is back here in June. You're looking at a swing point from June 13th. The low on that swing point is 16,640. We always take a look at swing points because they become natural target areas. So if you see a close below 16,640, it says, hey, Mr. Elevator Operator, I want to continue going down further, and that's going to take you back into the swing points back here in May 20th. That'll take you back into around the 16,310, 16,505 level. Now, what you've also got at the 16,300 level is your 200-day exponential moving average. That's the blue dotted line. If we take a look at the last significant retracement in the market inside of the Dow, we can go measure that. But right now, we can see that the level was back in April 14th, and you can see price basically moved back into that area. So that's an area worth watching out here, which is really the 16,300 level. Now, let's switch from the Dow. Let's go take a look at the Russell 2000. Let's go get a feel for what's going on inside the Russell 2000. I'm going to switch back. We'll take a look at a monthly chart as well. So we'll pull that up on the screen. Now, in the monthly cases, how about that? In the monthly case, we can see it, too, moving higher with less relative strength. At this case, right now, if you were to see the Russell 2000 in the futures contract on a monthly basis, closed below last month's low, which is 11.16, and you're trading right now just slightly, did I say the open was, 11.33. I gave you the wrong number. 11.33.80. If you see it close below that, you'd have a reversal signal, and as long as there was follow-through in the month of August, then you'd have to say the likely move would be as long as it can break its 50-day, which, remember, that's 100 or 50 period, I should say, which equates to, what, 50, what is that? Hold on a minute. That's on the 20-day. That would be the 20 period. That would be the 100-day. You know, it's 9:17. Maybe the math isn't working that quickly in my head out there, but that's the black line at 10:59. You'd have to say more likely what the and when, you know, on the Russell 2000, what we'll do on the daily basis, we know that's been trading in a consolidation. That's really the more important pattern that is out there. Nonetheless, on the monthly basis, you are seeing a reversal signal. If we take a look at the weekly chart out here, and what's important is we're going to take a look at all of the markets during the next two segments, because I want you to get a perspective as to what's going on. Then we'll dive down into the intraday charts and get a feel for what is occurring out here. On a weekly chart, you're still just really inside the Russell 2000. Believe it or not, you're still just inside a cautionary area. Last time on a weekly basis, we saw the bulls come in and protect themselves. It was right here on the trading session of May 16th. Little morning star reversal pattern. So if you take a look at those lows are really the support level, which is 1078 out there. That's inside the Russell. That is the weekly chart. On the daily chart, though, let's just switch over. Let's take a look at my Ensign Windows charts out here. And the reason being is because I just have the pattern. I think that it is so easily drawn in here. Is it not? Where is the Russell 2000? Well, you know what? We can go look at it here using our E-signal indicator. So let's do that. Let me switch over. We'll take a look at the Russell 2000. We'll take a look at the daily chart out here. You'll clearly see the consolidation pattern. And right now, what the Russell 2000 has not done, it's actually holding up stronger, I should say. Let me move this off to the side here, make it a little bit easier for you to see. So if you're watching us on TigerTV, you can see that price so far is only corrected to the 0.618 retracement level, which is around 11.26. It's trading at or near that area as we speak right now. If, in fact, it breaks through there, price is likely to move down to 11.03. That's a 0.786 retracement. And then finally, that 1074. You see that 1074 level? That level has been tested and rejected back in the time period of February. It was tested. Well, it wasn't tested back here in the time period. The test took place on May 15th. And that's your consolidation pattern at the lows. That's Russell 2000. We get back from this first breakout here. We're going to continue by taking a look at the NASDAQ and the ES Mini. We'll take a look at the NASDAQ futures and the ES Mini. We'll see how they're holding up during this little pressure that is inside the markets as we speak right now. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
$697. We've had pops and drops, so we'll see if this morning is going to be a drop and a pop out here. Lead the charge to the downside, on life support here, eHealth Inc. EHTH is the ticker symbol. Closing out yesterday at $31.65, trading out right now at $22.30 out here. You talk about this thing has been in a steady downtrend ever since it made a high back here. The trading session of January 17th out at a level of 63.32. As I mentioned, it's trading right now in the pre-market at the 22 level. That is quite a haircut in a relatively short period of time. If we take a look at this equity here on a weekly time frame, we'll see that it's right now trying to pull back into, maybe not. Let's see. The daily time frame was trying to come back. Yeah, it is. It's trying to come back into the 22 area. Actually, if we take a look at any kind of sign of strength on a weekly basis, it's below all of them. Yeah, I got a nice wide-bodied candle out here, but no volume really behind the move. I'm looking at July 29, 2013. The low out there is $23, so it's trading below that. You've got this high volume area. Looks like eHealth, EHTH, is going to pull all the way back to the February 2013 area. That's in the 1485 to 1690 area. eHealth, absolutely on life support out here. Also moving to the downside this morning, you got 3D Systems, Triple D. It closed at $56. It's trading out at $48.41. At $48, it's going to be $48. Not too much damage here just yet. Getting below the swing point from April 28th, which is a low of $43.35. That could form an A to B equals CD to the downside out there. You've got Valiant Pharmaceuticals, VRX is a ticker symbol, closing out 125.83 right now, trading out at 118 and change. The upside, Apache Corp, it closed at 101.29. It's right now trading at 103.50, so just up a couple of bucks out there. Let's go back to the monthly, weekly, and daily charts. Let's take a look at the NASDAQ futures. Here is the monthly chart for the NASDAQ futures. Really a beautiful picture. As you can see, basically no damage to speak of thus far. From a monthly perspective, inside of the NQ, there's really no signal here. Yeah, it's moving slightly higher. Not slightly higher. It's moving higher on a slightly less relative strength out there. But no reversal signal today. Of course, it would be one heck of a move to the downside, which I do not expect in order for that to occur today. So the NASDAQ on a monthly looks long and strong all the way out there. If we take a look at the weekly, that's good for the bulls. That's bad for the bears out here because the NASDAQ, it already may have gone through its corrective period as it made its lows back in February out here. If you take a look at the weekly chart as well, inside the NASDAQ, actually, it's moving higher on relative strength out there, not less relative strength. So it looks very strong. The daily chart, the daily chart looks pretty darn good as well. Now, today so far, created a bear sash candle, did create a price relative strength divergent pattern out here on the trading session of July 24th. You did get a 3-candle reversal signal, that evening star pattern. You're getting some additional follow through today. Look for 39.21 to be a potential area of support. That is the 20-day exponential moving average. If that doesn't hold, then it's the 38.40 area that you would likely see price pull back to. But so far, weekly, monthly, and even daily, it still looks relatively strong out there. Now let's take a look at the last one. Let's go take a look at the ES Mini, the S&P futures. We'll go back to the monthly chart out here, take a look and see what kind of damage is being done. That's the monthly chart for the S&P. Basically, folks, if you take a look at a monthly, if you're a long-term trader out here, other than maybe trying to sell a top, which is a dangerous thing to do, the monthly chart for the ES Mini is as strong as you can get. There is no reversal signal. What would it need to have a reversal signal for the month? You need to see the day close below, inside the futures contract, close below 19.21. It's 30 points to the downside. That's not that it can't happen, but that's what it would need to do in order to have a real, in fact, a real reversal signal would take you down, but on a monthly basis, it would take you down below 1913.75. So that would be the numbers that you would pay attention to. On a weekly basis, for the S&P futures out here, also really nothing substantial. It had moved higher. It had moved higher with more relative strength out there, so there's no real divergent pattern. Moving, slightly lower today, trade out at 1951. It's below market profile low out here, but as you take a look at the weekly base, I don't believe it's below the market profile low on the weekly time frame out here, and not a ton of damage as we take a look at a weekly chart. The daily chart, it's starting to show chinks in the armor, and of course, things are going to turn on a 30-minute chart first, then the 60-minute, then 120, and then the daily out here. And now we're taking a look at the daily. 1945 happens to be the 50-day exponential moving average. We'll see if that level holds as support. 877-927-6648. Dow futures off 120. S&P down 13.5. This is Steve Rhodes. This is TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, it's just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Release the hounds. We got the Dow off 121 points, trade out at 759. S&P off 16, trade at 1954. NASDAQ Composite off 41 points, trade out at 44.22. Russell 2000 off about 13 points, trade at 1134. NDX 100 off 34. New York Stock Exchange down 94 points. Gold off $8. Silver down 4 pennies out here. All right, so now let's take a look at what else do we want to take a look at? All right, so what could get in the way? What could potentially get in the way of the market moving lower out here? Is there anything that could get in the way? You know, about the only thing that I can come up with at the moment for you is your friend and mine, the Euro Japanese yen. So let's go take a look and see what we've got going on there. So what's interesting is we take a look at yesterday's trading session, yesterday's bar. We see here on the daily chart, we see that price was able to move back inside its rising price channel out here. And this is a long-term rising price channel. Takes you back in the 2012 time frame. It broke through it slightly. It said, I want to get back in. I want to get back in the trend. And if we take a look at the correlation chart out here, this is the only thing that can get in the way. Well, I won't say it's the only thing. It's one of the things that most certainly could get in the way out here. And let's take a look at the correlation of the, because I've got a couple of them out here. The one that really seems to be working the best is with the NASDAQ, the Euro Japanese yen correlation to the NASDAQ. Now we can see here clearly it had been and has been showing a divergence. With the bottom of the chart here is the Euro Japanese yen. You can see it's been making lower lows out here all the way since the April time frame. So since the most recent lows inside the NASDAQ, where the NASDAQ has been moving higher. So I take a look at this tool and compare it either to the ES Mini or to the NASDAQ. At this stage here, the correlation from a directional standpoint has been moving pretty well in lockstep. I know I can get it out with regard to the NASDAQ, with the exception of the last couple of months out here. What we can see is it is moving higher. It is something to pay attention to out here. I'm not willing to give up on its correlation. Sometimes things just simply don't work. They don't work, and maybe just kind of put it off to the shelf out here. But knowing the strength of this currency pair and its correlation to the markets, it is not worth just simply throwing off to the side and saying, well, you were a good friend, and now you are gone out there. And if we take a look at what's going on the 120-minute time frame chart as we speak right now, it's still nice and strong. You know, yesterday, big moves higher. When we were taking a look at the show here, the 9, 11 o'clock shows, we were noticing that you had a nice wide-ranging bar making that 1 to 1 A to B equals CD after it had broken the descending price channel out there, and that was suggestive that it wanted to go to the next level. Well, the next level it did. That was your 1 to 1.272 A to B equals CD. To the upside, that's the 137.74. Look, it got into the extreme overbought condition using that 120-minute time frame chart out here, and we can see no bearish reversal signals. Well, you had this little shooting star candle. That took place at 5 a.m. So from 3 to 5 a.m. out here when our market started moving lower, so too did the Euro Japanese yen. And now what you can see, it's fighting that off. If you can close above that shooting star candle, the high of that is, oops, what did I do there? Let me go back at my big crosshair. Come on, do that for me. There we go. If you can close above the high of 137.84, then she'll be off to the next level. That next level, 138.05. So that is one thing that most certainly could, because it's a liquidity gauge out there, that could get in the way of a move lower inside of the markets out there. But that is, well, there's some other things, but nothing at this stage here that I'll go into with you. But let's go take a look at what's going on the shorter term time frames, because you know that price relative strength divergent pattern out there, it's a strong pattern when you have it, you've got to be paying attention to it. Now, here's the Dow. This is a 120-minute time frame out here. That pattern is now void with a move lower with more relative weakness out there. So the Dow, and we want to really pay attention to what's going on inside the weak link out here. And I suggest to you that it's the Dow more than the Russell 2000 as we speak right now. And we want to see what's going on inside of strength. So let's size this down. Let's take a look at a 60-minute time frame, see if we've got anything going on inside here. Now, in the 60-minute time frame, we do have such a price relative strength divergent pattern here inside of the Dow. So that says during the next hour or so, we'll watch to see how this pattern plays out, whether or not we get any kind of bullish reversal signal, which could be nothing more than just a counter trend rally that would take place out here. But we'll know good enough. Expect on any kind of counter trend rally for significant resistance to be up at that dotted line out here at the 16,906 area. Let me put this on a little shorter term time frame as well. Let's take a look at the 30-minute, and on the 30-minute basis out here, it too moving lower, doing it on less relative strength. Now, the reason why I switched down to the 30-minute and the 60-minute out here is because of the way that futures were trading in the overnight session, and certainly coming into the close. The natural thing for people to want to do is to jump onto the short side right then and there. I suggest that's not when you jump on the short side right then and there. You would want to, if you wanted to get on the short side, you would place some type of counter trend rally out there. And that's why we're just simply, so I expected, to see that push lower. That's what we have seen thus far. We'll see whether or not the bulls are out here and they want to try to defend their territory. They've got about 20 minutes to go on a 30-minute time frame to give us any kind of potential reversal signal inside of the marketplace. And we'll pay attention to what's going on inside of the Dow, just as we'll also, we can pay attention to anything that we want, of course, but we'll go switch over and take a look at the 30-minute time frame here inside of the NQ. The NQ, really, the damage has been so minimal. No price relative strength divergent pattern here inside of the NQ as we speak at the moment, certainly on a 30. We're not going to see it here on the 60-minute. We're not going to see it on a 120-minute time frame chart either. Nonetheless, we'll go ahead and we'll put it the 120-minute time frame for you, because on the 120, well, I might have to do it on a it might be easier for me to do it on a different platform out here. Yeah, so if you take a look at that little dotted line, that 200 period exponential moving average, 39.2991 is the number out there, and that's so far where price last stopped. Now, the last breakout that we saw inside of the NQ, inside of the NASDAQ futures, was when it broke above that same dotted line area, and that was back at 8 o'clock in the morning, and that was on July the 18th out there. Now, when I say not much damage done, it'll be easier for me just simply from a retracement standpoint. Well, let's do this here. I can use the let's go use the eSignal platform to do that. So in that way, we've got the market profiles as well. So let's take a look at the NQ. Let's take a look at the 120-minute time frame out here. And let's go ahead and we'll pull this back. And what we're going to do here is, well, first what I'm going to do is I'm going to clean the chart up just a bit. We'll put the profiles back on in a moment. Let me just move over here. Let's turn off. Let's turn that off. Let's turn these guys off as well, because we can add that back. There we go. So we'll just leave that in place. So now we've got kind of a clean palette to work with. And what we're going to do is we're going to take a look at retracement levels by going to the low that was put in place out here. This is a trading session that came in at about between 1800 hours and 20 and July 17th. And we go from that low to the high that was put in out here on the trading session between 6 and 8 in the morning on July 24th. What you're going to see, let me move it back a little bit to the left out there. You'll see that price here is only been able to make it to the 0.382 retracement level. That number is 39.38. You're trading at 39.38 right now. What does that say? It says if you see it close below this, if we see any kind of meaningful close below this level, what we'll likely do is a natural and a normal retracement inside of the NQ would take you down to the 0.618 area. That's at 39.06. That would be natural. That would be normal. Price, however, what's interesting here, if you take a look at the bottom of the chart here, that's what we're going to focus on for the moment. You're going to see the 14-period relative strength indicator out here. Take a look. It's trading at 31.37. When you get down to 31, when you get down to 30, you start to move into an oversold condition. Can it extend itself beyond that? Yeah, of course. Take a look at what took place back here on the trading session of July the 8th. It extended itself through that for a couple of hours out there. So if it does extend itself through that, expect that 39.06 area to be a level of support, just normal. If it doesn't, if it's not able to do that over this next couple-hour time period, this 120-minute chart here completes in 17 minutes at 9:43. So whether it's this 2-hour time frame or the 2-hour time frame till 12 noon, if the 0.382 level holds, man, that's telling you about substantial strength. Look, even if it gets to the 0.618 area, that still is pretty darn good as well. So we've got a market that is certainly not in unison, because if we switch over, now let me go ahead, we'll put the market profile up. Where would a counter trend rally take you to? Well, if we just simply take a look at our signal boxes out here, you'd have to say the counter trend rally could take you up as high as about 39.77. So the range would be 39.57 to 39.77, maybe even 39.65, but 39.77 would be the number on the 120-minute time frame that you would be watching, because any rally that would take you above that, and if this area here holds, Not saying it's going to. All we can do is wait and see what the market gives us here. But if this area did hold, there'd be one heck of an A to B equals CD pattern to the upside out there. And that is inside the NASDAQ future. That's the NQ on its 120-minute time frame. Of course, just to show you the difference in weakness, and in fact, let's just take a look at the S&P futures and do the same. You can see that the S&P futures out here, let me get rid of the A to B equals CD down pattern out here. You can see they have come all the way back and made a 100% move. They are trading into the swing point from July 17th. That took place between the 6 p.m., 8 p.m. time frame out here. So it's important for it to hold that swing. Now, the low of that swing, that's priced out at 1942.50. A crack below that, let's pull this back here further. Any cracks below that, let me see where this would take us down into. It'd come all the way from a retracement standpoint. Let me do this here. We'll go ahead and clean the chart up just a tad for you. What I would do is come all the way back to the swing points back here on June the 12th. And take a look at retracement level. So since that's what I would do, why don't we just go do that and give you some type of price target area for the ES Mini. And that would take you down into, well, the 0.618 retracement level is at 1943. So the ES Mini would have to crack the 1943-ish range, and that would then send price down to the 1931. We can see what's also at that 1931 level is last time that we see any kind of really significant wide-ranging bar to the upside, and that took place at 2 p.m. on June 18th. So you'd have to say pretty darn good support inside the ES Mini at that 1931 level. And that's taking a look at the 120-minute time frame chart out there. So that's an overview of the futures. During the next hour's show, we'll go take a look at the actual indexes, and we'll look for levels there. But in the meantime, let's go take a look at things that are moving in the marketplace. Let's take a look at things that are popping and dropping. And let's take a look at Vistaprint. Vistaprint, you probably see all their commercials out there. Well, the color that they're printing today is green, up 25% out here. How about that? They generated revenue, $338 million versus $280 million, so that is one heck of a nice jump out there. Let's see what they were able to. That was for their fourth quarter. For the year, for the revenue for the year, though, they're only expecting about $1.47 billion. Well, I don't know, only expecting. I don't know what that compares to. Let's take a look at net income. Net income, they were actually able to not double it, but not too far away. Last year for the fourth quarter, they did $14 million. This year, $25.6. So let's go take a look at Vistaprint out there. Happy to give away cards and things of that sort. But what Vistaprint is doing out here, even with that nice move up, it's running right into a very strong area of resistance, which is this gap down with volume. Talk about wide-ranging bars out here. Remember, always fill in those gaps. Color in those gaps with the bar to give you real good indication as to what's going on. The trading session that we're looking at is April 29th. Inside Vistaprint, it made a high of $53.87. The low was $48.60. And the next day, what it did actually closed out that session at $53.42. It fell out of bed completely on April 30th. That was an earnings date as well, and apparently that earnings date, the traders didn't like what they heard out there inside of Vistaprint. Ended up making a low with volume. The following day made a lower low, and we can see that that level actually has been tested and rejected out here. The low, meaning the May 1st area, the low was 37.50. The volume was 1.5 million shares. The last couple times down here was with 189,000 and 193,000 shares. So let's pull Vistaprint back here. Looks like maybe setting up potentially a consolidating pattern out here. It all depends if it can close its window. What do I mean close its window? Let me clean up this chart here for you. There we have a little bit of a cleaner chart for you to take a look at. And inside Vistaprint, these gaps are your friends, either to the upside or to the downside. And if we just simply draw a horizontal line at the very bottom of the candle where it gapped down from, that's at 48.60. You can see the volume down here in my second panel. From top to bottom out here. And again, that had volume on the downside, 4.6 million shares. So far today in trading, with only 19 minutes, it's had 576,000 shares. So not too bad. The likely area of resistance is going to be 48.60. Closing that gap would be a strong message out here, but it doesn't get really strong until you actually take out the high of April 29th, and that is the 53.87 area. And that is on Vistaprint. Right now, the Dow's trading off 115, S&P down 14, NASDAQ Composite off 36 points out here. We get back from this next break. Let's go take a look at Goldilocks. Maybe we'll take a look at silver, light sweet crude as well. Hope you're having a great Thursday. Thanks so much for joining us here. This is Steve Rhodes. This is Tiger Financial News Network, and we'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 124, S&P down 14. A quick check on those 30-minute charts out here with 6 minutes to go in the trading session. What we've got out here is no reversal signal here yet as we speak inside of the Dow as it moved lower with less relative weakness out there. So nothing here to indicate a reversal in the weak hands out there. In fact, one of the things that you want to pay attention to is, let me do this. Let me change over to our daily charts. Let's do this. Let me pull this back up on the screen. I had gold, but let's go take a look at the, let me switch to a daily time frame out here. And I'll show you something to pay attention to inside of the diamonds today, because the diamonds here are weak, and we're going to go find is the last time that we saw the real bulls out here inside the diamonds. And you'll see it's this hammer candle that was formed back on June 26th. And that low, which is priced out at 167.06. You're trading at 167.23. It's an important low for the diamonds to hold. When you take a look at a hammer candle, it's a single candle reversal session. It really tells you where the bulls are at. And when there's an expression that I like to use, which is when you break a hammer candle low. Not when I mean break it, I mean close below it, by the way. I don't mean test it. I mean close below it. If you're long, you're wrong out there. And, of course, then what does that really mean? What does that translate into? What that translates into is moving down to the next swing point as a minimum price objective, or as your price objective out there. And that would take you back into that May 20th time frame. Well, as long as we're out here, let's go take a look at gold. Let's put gold. Let's put up the contract here for, give me a moment. Where is gold, the August contract? Where is she? Should be right in front of me. Somebody's saying, hey, Steve, it's right in front of you, because it was right in front of me. So that's the area to pay attention to inside of the Dow diamonds out there as another area to be paying attention for weakness. We can see here gold, when it made its low and it made its bottom back here on December 19th, it did so with less relative weakness. You finally got some bullish reversal signals. We also see really the same pattern out here at the highs that took place, made a, excuse me, a little dust there. Thank you, and sorry about that. If we take a look at the highs that were formed out here inside of the gold contract, it too was making a price relative strength divergence pattern. Right now, trading right at the blue line out here, which happens to be the 50 period, exponential moving average out there. It does look to me like gold still wants lower price, but knowing that we've got this 13.5-month cycle that is coming in, I'd have to say the closes over the next couple of days here, so as we enter August, the closes over the next couple of days are going to be really important to watch what happens with gold, because I would be willing to, if we see some bullish action, I'd be willing to change my tune with regard to gold continuing to move lower, just based on a number of different patterns that are out there. So we'll just wait and see. Other things that are moving to the downside out here, you got level 3 communications off 14%. We'll take a look at some of these things in the next trading hour. FEI company, that's off 12%. Carbo Ceramics down 7%. Boy, that eHealth in very bad shape, off 33%, down $10. The upside, Vistaprint, Open Text Corp, OTEX, that's up 16%. Bungie Limited, we'll go take a look at, I think it's maybe Bunge, but we'll call it Bungie, and see about what kind of Bungie jump it is doing. So, folks, if you're out to start your Thursday, thanks so much for joining us here at TFNN. Don't forget, we start each day at 8 a.m., 8 till 6, so we got 10 hours of live programming each and every day. Have a terrific Thursday. I look forward to seeing you for the next hour or bright and early tomorrow morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.